I think everybody can see that. Good evening. I'm Bob Labbe. This is my buddy Bill Glaeser.
Hello.
We've got a lot of material to cover. So if we speed it up through the meeting, I hope you'll understand. To make it easier for you, the slides are all on in your packet, so you don't have to take too many notes, but there's space there for you to take notes if you want. Restrooms are in the library. If you need to get up at any time, feel free to ask questions. I think there's some coffee and water in the back. So, we're going to, this is the not-for-profit workshop. There are others that SCORE has, and we'll talk about some of them, the key ones being business planning, business basics, which is an overview of how to operate any business, for-profit or otherwise. Those are the two big ones. Is there another one, Bill, or those are the main ones, right? Tonight's presentation will have 4 basic parts. There are really 5 because getting down to talking about a business, we talk both about the management side and the board side, so they're the governance side, if you will. But we'll be talking very briefly about SCORE, then the difference between a for-profit and a not-for-profit. That's a critical piece for us to talk about because many people come to this workshop thinking they want to do a not-for-profit, and then they get an idea of what it is and they're not sure about it. So it's really important for us to talk about that. Then we'll talk about the business, governance and management, how to set up a not-for-profit and your next steps. We're a little bit pressed for time, but I do want to take a minute, if I could, and go around the room very quickly. If you would just tell us what your interest is in the workshop, what your not-for-profit interest is.
Okay, I'm an author, self-published, material available on Amazon, my own website, a blog, etc. The amount of profit that is there is so small as to get me into the point where I'm wondering if it's worth it, and I'm wondering because of the nature of what I would do with any profits if I had them, in terms of contributing it to missions and various other things, if maybe simply making it a nonprofit might be a benefit or not.
Okay.
I don't know, that's why I'm here.
Okay, good. What is your name?
Tom.
Tom. Tom, okay. There is in your packet, maybe there isn't, a little tent-like thing if you want to put your name on that. Did you get those, or maybe she didn't pass them out? I don't think they were passed out, so we'll skip that. Yes, ma'am.
Well, I'm at the very base level of learning about nonprofits. I'm at the very base level of learning about nonprofits, but I'm very interested in trying to keep more older adults in their homes rather than seeing them go into nursing homes. So that's where I'm at.
Good, good.
Hi, my name is Pamela Mayfield, and I started a nonprofit last year, but I still don't have my 501c3, and I'm still trying to figure that part out, and it's for survivors of breast cancer.
Oh, good. We'll be talking a lot about 501c3.
Yeah, I guess I'm at the basic level too, just trying to do some fact-finding, get some information. I'm an educator and just looking to see what opportunities are out there.
Good, good.
My name is Tom. I've come out of retirement as an attorney to represent a nonprofit that already exists, and I'm here to sharpen the saw in the management skills and so forth.
Good, good.
Hi, my name is Evelyn, and I am also interested in getting into the nonprofit because I would like to help keep seniors into their homes to do a non-medical home service.
All right. So the two of you need to talk, maybe. Are you with her?
Yes.
Do you want to talk? You can.
Walter, just wanted to learn a little bit more about not-for-profit, basic information.
Okay. We're just getting an idea of what your interest is in not-for-profits.
Well, I just recently retired, and so I want to try to find another activity that'll keep me busy, and so looking at non-for-profit activities. So just trying to learn here as much as I can.
Good, good. I won't talk to you because you'll tell them you wondered why I worked in one so long.
I'm an attorney, and one of the things I do is I can form 501c3 nonprofits for people, so I'm just looking to get more information about it from the seminar.
Okay, good.
I've been on several boards for nonprofits, and I just want to know how to be a better board member.
Excellent.
Oh, thank you.
Sure.
My name is Val, and I'm looking to dust off my business skills from years ago, took a break from the workforce. But I'm also looking to find out about nonprofit businesses from the educational perspective of team sports. And I sit on a lot of local boards here in Hudson for volunteerism. So there's a lot to
Okay.
be learned.
We'll be talking a lot about boards. Somebody came in later after I started this.
I'm just a certified peer supporter for addictions recovery, and I'm a house manager now for a men's treatment house for the Packard Institute, and we're just trying to find ways to run the nonprofit and get funds to improve the house.
Okay. Are you together? You want to talk? Go ahead. Okay.
My name is David Brown. I'm interested in creating a nonprofit relating to historic preservation at the Kaiser Farm Park in Cuyahoga Falls. And hopefully something will happen.
Nice place. Good. So we have quite a variety, a lot of folks wanting to know the basics, and that's what we're going to talk about. I don't know how to turn this thing off. Oh, thank you. Okay, let's get to the heart of it, because I think we'll cover some areas, most of the areas, if not all of the ones you talked about. A little bit about SCORE. SCORE in Akron was started 1965 with the purpose of providing resources, expertise to maximize the success of existing and emerging small businesses. The not-for-profit part really started about 10 years ago when we recognized we had folks who were very much interested in that. And as we'll talk about it, you'll see that we see not-for-profits to have many aspects of businesses, so it fits with the mission of Akron SCORE. SCORE is manned, woman, person, people by men and women who are largely retired, who have experience in business, and who want to contribute something to the community in their retirement. We have some 60, 65 volunteers with experience in a wide range of things, from management to advertising to marketing to accounting, et cetera, et cetera. We don't provide any accounting. We aren't accountants and we aren't lawyers, so we won't provide those services, but we will refer you to folks who can do that. We have about 45,000 clients who have benefited over the years with us, and SCORE is really part of the we're affiliated with the Small Business Administration. The amount of money we get there won't pay our parking, but that we're affiliated with them. So you'll notice in your packet, if you've not met with us before. There's a form in there. It looks pretty legal-like. We would like you to fill that out, if you would, before you leave. Pauline, is it in there? It is in there, right?
The SBA 641.
SBA 41?
641.
It's not in there. We'll get those. We'll get those. But that helps them understand what we're doing and helps us keep our agreement with them. I don't think it's in your packet. I didn't see it in the one I have. So Pauline hopefully will get those for us. So our counseling services are confidential. We do one-on-one counseling, so if you come in, what you say remains with those of us who are working at SCORE. So tonight, this is probably the most important slide we're going to look at. This one and the next one. The difference between a for-profit and a not-for-profit. Critical. If you look at them, you're going to see that by definition there doesn't appear to be a great deal of difference. For-profits produce, market, and sell products or services to make money for their owners and investors. It's the only reason they exist, is to make money. Not-for-profits produce, market, and sell products to improve the community. None of the money reverts to the owner. For-profits, Acme Grocery Store exists to make money for the folks who own Acme Oak. Now, there may be, you might look at that and say, well, they're providing a service to the community. Without them, we'd be looking for farmers, you know. They're providing a great service to the community. But that's not why they exist. They exist for the owners to make money. A not-for-profit, on the other hand, this library, exists in order to benefit the community. So that any profit that is made from our book finds, for it, or whatever, has to revert to the library. That's the critical difference. Now let's take that in a little bit more detail. For-profits are privately or publicly owned. They're owned by the people who start them or by the stockholders. It's as simple as that. The income accrues to the owners. They're governed by the owners. And they may be bought and sold by the owners, with the owners taking the money and running. The owners call the shots. They can do virtually whatever they want, as long as it's legal. Not-for-profits are very different. They're owned by the community. No private interest, no stock. No one may personally benefit from the earnings of the not-for-profit. Now, you can employ people. You can pay somebody to run your not-for-profit. That's a business expense. But if there's money left over, you can't disperse that to your friends or your family or whomever. That money belongs to the not-for-profit. The income profit must go back into the business. Nonprofits, where in a for-profit, the owners make the decisions about what the organization is going to do. In a not-for-profit, that's done by the board of trustees or directors. They're really representatives of the community. Somebody once described them to me as the stockholders. They're the people you have to satisfy because they're the community. And if this not-for-profit ceases to exist, or if it wants to just quit doing what it's doing, any profit that is made from selling the not-for-profit, its products, its facilities, whatever, must in some way revert to the community. Generally, that's done by making sure that those resources go back to another not-for-profit. And the bylaws that you'll hear us talking about, in those bylaws, generally there's a statement in there that says that if for some reason the not-for-profit should cease to exist, then all of its assets must accrue to the community or to some other not-for-profit organization. You can even designate who that's going to be if you want, though I wouldn't recommend that, because you don't know what's going to happen 10 years, 5 years from now. The organization you want it to have, it may not be there. So that's the critical difference. Are there any questions on that? Because it's really, really critical.
Who generates the bylaws?
Pardon me?
Who generates the bylaws? Is that them?
Well, whoever's setting up the not-for-profit will do it initially with the Board of Trustees. The Board of Trustees then manages those bylaws and generally can revise them, whatever, but that's the job of the board, yes.
Will you be talking more about picking the board,
Yes.
requirements of the board, et cetera?
Yes, we're going to the board extensively. Okay? Now, this is the basic decision you have to make. Do I want to be for-profit or not-for-profit? And inevitably, we lose somebody on this, because they come in thinking they want to be for-profit, and then they say, whoa. But this is the critical point. Will I be for-profit? Will I be not-for-profit? You have to define in your own mind your reasons for doing that. The wrong reason to do it is to raise or obtain money, because a not-for-profit doesn't exist to raise or obtain money. It's also very, very difficult to raise money, and we'll talk about that as we go along, but it's very, very tough. The right reason is that you have some service, some cause in mind that you can address, and by doing so, you benefit the community. That's the reason you want to do a not-for-profit. Because whatever you're doing is important enough for the community to benefit from it. We suggest that you only, well, you really have to, incorporate as a not-for-profit only if you rely on donations, government funding, and/or foundation grants. Now, that sounds contradictory to this up here, that the primary reason is not to raise money. You're going to have to raise money. That's just reality. And you want to do it from donations, government funding, or foundation grants because of this item. 30% of your money must come from donations, at least. So if you have a product you're selling, we'll get into that later, but and you're generating $100,000, you better have $35,000 or so of donations as a part of that. That's IRS good stuff. Okay? Now, there are a couple of myths we want to dispel right away. We're talking maybe this is the wrong place to do this, but we're going to do it anyway. There are the myth that not-for-profits cannot make money. You notice we don't talk about this presentation as a non-profit presentation. We talk about it as a not-for-profit presentation, because we exist not for profit, otherwise we would be a for-profit, but we can make a profit. We not only can, but we should make a profit, because the profits go back into the organization, they allow the organization to operate effectively, and they allow you to reinvest in your programming, in your services. So you do want to make a profit. You don't want to end up the year in deficit, and you don't want to end up the year just barely making it. Now we'll get into there's all kinds of reasons for that. But like any business, your income's going to go like this. And if you don't have a cushion of some sort to rely on, you're going to be in difficult times. So you need to make a profit, and you need to carry that profit, or at least some of it. The other myth is that you can't lobby. Now you say, why is this a big deal? Well, this is a big deal because not-for-profits oftentimes are working with legislators, county council people, city council people, state people, whatever. So the question becomes, how much of that can I do? Well, you can do a lot. Lobbying's not only permitted, but you're able to commit a limited amount, an insubstantial amount of time and money, totaling 5% to lobbying by IRS definition. It doesn't seem like much, but it's a lot if you understand lobbying. Because there are a lot of things you can do that aren't lobbying that people think are. This is a definition we took from a really good primer on this stuff called the Not-for-Profit Kit for Dummies. It's really a very good little book. But their definition is very good. Lobbying is the effort to influence legislation by influencing the opinion of legislators, legislative staff, and government administrators directly involved in drafting legislative policies. So if you're going into an activity specifically to influence legislation, you can do it as long as it falls within that 5%. But there are a lot of things that are lobbying and a lot aren't. Promoting specific candidates for office is lobbying. Promoting specific pieces of legislation is lobbying. Writing legislation and giving it to your legislator and saying, can you do something about this? That's lobbying. Very specific. Now, one thing that does come up, talking to legislators, you can talk to them all you want. You can even have, during election time, you can invite all of the candidates here to the library to tell people about their ideas, their work. If only one shows up, that's fine. You did your part. Okay? So you can hold candidate forums. You can explain your mission and services to legislators. That's not lobbying. You can ask for general support for the mission and services of your organization. General support, that's not lobbying. Advocating for the needs of your client population is not lobbying. That's the big one. Think about that. You're planning to work with older adults who need your support in their homes. So there's a bill passed. Well, you just call the legislators and say, I want to talk to you. And you want to talk not about you, not about your organization, but about that need. You can do that all day from now to next month and nobody's going to care. Now, you finish that, you get back to your office, and 5 days later, 5 months later, a legislator calls you and says, we've got this piece of legislation. I wonder what you think of it. And you say, thank God, I've been waiting for him to call. They called you. You didn't call them. So you're not lobbying when you tell them, yes, I like it, or no, I don't. They called you. You're responding to them. You're a constituent. They need your ideas. They called you. That's not lobbying. Quick word on your reputation. Sometimes not-for-profits kind of feel they've got it made because they're doing something good, and they fail to watch the bottom line or something else, and they hit the newspapers and all that, and we've all seen that. You want to be very careful that what you do is all above board. You want to make sure that you have good staff. You want to make sure that all of your controls are in place, because these things can and undoubtedly will happen. Without any doubt, the chances of these things happening to any not-for-profit are probably above 90%. Adverse personnel actions. You're an employer. You're going to have people who are not liking what you're doing. Misappropriating funds. Folks say, it's never going to happen. We got all this stuff in place. Don't ever, if you're running an organization, don't ever sit back and think that can't happen. As soon as you do, you're in trouble. That's a big one. You control spending. Don't get into a habit of deficit spending, and your board shouldn't allow you to. Make sure you pay your bills, all of them. And if you have a client who brings you a concern and you don't resolve it, you're opening the door to problems. These are critical issues that you want to take care of. And we haven't really gotten into what's a not-for-profit, how to do this yet. And we're already talking about problems. That's because Bill and I have been around too long, I think. Okay. What kinds of not-for-profits are there? Well, there are all kinds of them. If you look on the web, IRS 501c, 501, you're going to find a whole list of different not-for-profits. Tonight, we're going to be talking about charities, a public charity, a 501c3 public charity, because that's what most not-for-profits are that you're going to be involved with. We're not talking about government agencies, we're talking about charities. Now, there's another type of 501c3, which is a foundation. We're not going to be talking about foundations other than late in the program we'll talk a bit about using them for money resources. The key difference is that a public charity exists to provide some service to people for the betterment of the community. Foundations exist to give away money. So unless you're thinking about setting up a not-for-profit that's going to give away a bunch of money, that's not what we're talking about. We're talking about a public charity, okay? There are other kinds of not-for-profits that are not public charities, service organizations, Kiwanis Rotary. Those aren't charities. Some years ago, Rotary Akron ran a camp, still does, for children, disabled children. Wanted to find a way to get more money in that. They created a 501c3 public charity in order to do that, because they were not a charity. Educational organizations, science organizations, business leagues, chambers of commerce, social clubs, labor, these are all not-for-profits, but they're not charities, and they're not what we're going to be talking about tonight. Advantages of a not-for-profit. You get certain tax exemptions. There are other taxes you have to pay, and we'll talk about that, the specifics there in a few minutes, but you get certain tax exemptions that for-profits don't get. If someone donates money to your organization, that money is tax deductible for them, not for your organization, but for them. And we'll talk about that a little bit later. That's an advantage because that encourages people to donate money to you. Every time there's a debate in Congress about changing the tax laws, that one comes up. And the question is, will it help charities or will it hinder charities to have that deduction? And the general consensus is that it helps. Not-for-profits also can get grants from those foundations I just talked about. But you have to be 501c3 to get them. The other foundations generally don't get them. And you have to be able to prove that you're a 501c3. You can very often get lower costs on things. Your employees might generally consider, they generally work for less in not-for-profits than in for-profits. So not all of that's not always true, but it can be. And you can use tax-exempt bonds on occasion. Those are usually used for some brick and mortar process maybe, so that the organization can grow. So there are benefits. There are disadvantages, and look at these closely, because this ties into making your decision. You lose control of your organization. For-profit, the owner can make whatever decisions he or she wants to make. In a not-for-profit, those decisions are made not by you, but by your board of trustees. You lose control. You exist for a limited purpose. You will define that when you set up your not-for-profit. You'll define your purpose. You must stay within the parameters of that purpose. Not-for-profits don't have to. So you want to define that carefully so that you can move within that. Lobbying activities are limited. We talked about that. Much more public scrutiny. Your tax returns are public information, as one example. That's not true in for-profits. So there's a lot more public scrutiny. Not-for-profit reporting requirements are much more extensive than they are for the for-profits. And if you can't wrap your head around that one, the most recent example, money for cars, cash for clunkers, remember that? And what happened? All of the car dealers began to complain. They had too much paperwork. They couldn't get it done quickly enough to get the money turned around quickly enough. It's a whole different, that's what not-for-profits deal with every day. And you must file, like any corporation, you must file an annual tax return, a Form 990. 990 can be, depending on the size of your organization, it can be an easy form, or it can be the full-blown 990. Generally, your accountant will do that. They're not really that complicated, but if you're of any size, you'll want your accountant to do it. Okay, Bill Glaeser, who I'm sure everybody recognizes from his stint as 45 and 49. Bill is going to go from here. Bill.
Okay, thank you, Bob. Okay, we're going to talk about the next section here, running your not-for-profit as a business, because it is a business. And if you have any thought that you're not going to be running a business, you don't want to be a not-for-profit. You are a legal entity, so to be a not-for-profit, you must be incorporated in the state where you're operating, and you must obtain a federal ID or federal tax number. Now, you also must follow the same kind of laws that for-profit organizations have to follow. You have to have occupancy permits. Your facilities must be in areas that are zoned properly. You need to have the proper licenses and certifications. If you're, for example, running some kind of a food service with your not-for-profit, you need to have a food license. In many communities, you may need a fundraising permit. You will need to be registered with the state for fundraising as well. You have to follow all of the equal employment opportunity laws, and the same thing with the occupational safety regulations. Just because you're a not-for-profit doesn't mean you can ignore those. You've got to follow them. Not-for-profits do not pay these kind of taxes. They don't pay federal taxes, state taxes, local taxes. They don't pay sales tax. They don't pay corporate tax. But all not-for-profits have to pay these kind of taxes. You may be assessed for water or street maintenance or something in your location. That's an assessment you'll have to pay. Your employees and your organization will have to pay Social Security tax, Medicare taxes, workers' compensation, unemployment, and you have to withhold income tax from your employees. You have to do it. Now, if your organization does something outside the realm for which it was incorporated, and it becomes a more commercial activity, you may end up paying unrelated business income tax. Let me give you an example. Let's say you're running a social club for disadvantaged children, and you operate that out of a recreational facility. So you have a gymnasium, and there's an outside group that wants to come in and they want to rent your facility to showcase some kind of an activity that they are doing. let's say it's the local real estate board, and they want to invite the various realtors in to make presentations. That is not part of your purpose as a not-for-profit. You can rent the space, but any income from that is taxable. And your accountant will help you with that, but it's something where you may end up, as a not-for-profit, actually paying some taxes. It's not going to affect all of you. It might affect some of you. Now, because you're running a not-for-profit doesn't mean that you can ignore certain truths. And businesses fail all the time. For-profit businesses fail all the time. Not-for-profits, unfortunately, do as well. And the 9 out of 10 reasons why businesses fail are the following. Either inexperience by the manager in the specific line of business or in management in general, or the manager's inability to manage tasks or to manage others, or underestimating costs, or not understanding what cash flow is and monitoring it very carefully. And sometimes all 4 areas tend to torpedo not-for-profit businesses. So these things are really critical. If you may have a great idea for a not-for-profit, but if you've never worked in, let alone a not-for-profit, but in that specific skill area, you may end up with some problems. And I'm not saying you will, I'm just saying it's something you need to watch. Now we're going to continue on by how to set up your not-for-profit. And the first thing, before you start filing for a 1023 form to get your not-for-profit status, before you start filing with the state as a not-for-profit, before you get a federal tax ID number, before you get any of those things, first sit down and prepare a business plan. A business plan has a solid, unduplicated program to address a pressing community need. Within that business plan, you will find a mission statement. You'll set out your goals, your objectives, and your activities. You're going to assess your resources. What skills do you have? What kind of skills are you going to need to hire in? You're going to do a strategic analysis of this business. And you want to spend a good amount of time doing it. It's not something you're going to toss off on a weekend and then start filling out 1023 forms. You want to really think this thing through really carefully. You'll want to be defining the service to achieve the mission that you set out. You want to define your population of service. Who are you going to serve? How are you going to reach them? And we'll talk about that some more later. Then you'll put together your board of trustees, and we're going to spend a lot of time talking about how to find board members and what their responsibilities are a little bit later. And then develop a 3-year budget. And only when you have those items, then, and you're convinced that you can make a go of this not-for-profit, then start incorporating and getting your 501c3. Now, in defining your mission, you're going to research the community. And you're going to start thinking, who else has a similar mission? Is there anybody else that maybe you could partner with? Because you're all going to be competing for the same pots of money. And unless the not-for-profit that you're planning on setting up is going to have a really unique niche, you're going to have trouble raising money. So find out who's providing the same or similar services. See if there are any ways you can partner with them before trying to start out on your own. So defining what are you going to do, how are you going to do it, where are you going to do it, and for whom are you going to do it? Critical questions. All these are in the copies of the slides that you've got. So think about these things really carefully. Defining your population. Who are you going to be serving? Who's the population? Are they adults? Are they teens? Are they children? What ages are they? Where do they live? What's their income status? What are their problems? What are their needs? If these are going to be your customers, what are their needs? Where are they going to come from? How are you going to contact them? And when you've done all that, you can then start to determine the kind of qualifications your staff is going to need to be able to serve that population. If you're dealing, as an example, with senior citizens, it's going to be much harder if the people that you're hiring tend to be right out of high school or maybe early college. There may be some relational issues there that may get in the way of providing good service. So think those things through very carefully. When you're doing your budget, first of all, you need to determine your startup funding needs. What are you going to need to acquire to actually get your doors open, to start providing services? And besides the cost of incorporation and getting your 501c3, are you going to need to buy computers? Do you need to rent office space? Or are you renting this out of your den in your house, second bedroom in your apartment? So again, what are you going to need to get your doors open? What kind of supplies? You'll do a budget for that. And then do an annual expense budget. What's it going to cost you to actually run this business once the doors are open in years 1, years 2, and years 3? What's it going to cost? What will it cost to pay people? What about supplies, transportation, costs of accounting and audits, those kind of things, internet connections, telephones? All of that stuff adds up. So do a 3-year expense budget, then defining where you're going to get the revenue to make that budget work. In other words, where's the money going to come from? And you might say, well, we think we can get so much in fees, and we think we can get so much from donations from individuals, and we think that there's some foundation money out there, and maybe we can get some money from the state. That's great. But then specifically, where is it going to come from? What state program? And actually identify it, what it is. If it's a foundation, don't just say foundation, say Akron Community Foundation, $3,500. And we'll tell you in a little bit how to research foundations to know where the money potentially could come from. The more time that you spend doing these kind of things before you incorporate, before you get your doors open, will pay off for you long term, because you're going to end up having to do this anyway. So why not do it up front? Okay, so you've done all that. You're now ready you think you have a viable business. So what do? First of all, you incorporate in Ohio, and you do that by filing an application with the Ohio Secretary of State. It's done online. You need to print it off, sign it, send them a check. They turn it around pretty quickly, and you are then incorporated in the state of Ohio as a not-for-profit. You don't want to incorporate it as a for-profit, as a not-for-profit. So congratulations, you're partway in business. After you have the Secretary of State's approval, you file with the Internal Revenue Service. You get a tax exempt number, and then you file using IRS Form 1023 for your tax exempt status. Now, this is the 1023 is the long form. The IRS just within the last 4 months came out with a new way of applying if you have assets of under, let's see, I have to double check this here. Of assets under $250,000, or you plan on an operating budget of no more than $50,000, you can use a new form 1023EZ. It's filled out online. You pay for the service electronically. And I've had a client who incorporated this way earlier in the summer, and she got a favorable ruling by the IRS within 30 days, so it works pretty fast. I've had clients who have used the long form 1023, and if it's all filled out properly, and they do ask you for a lot of information, I've had clients get their authorization within a couple of months. I've also worked with one client for a year and a half because they didn't answer all the questions properly and repeatedly. And the IRS is a bureaucracy. If things are filled out properly, the paperwork moves along. If things aren't filled out properly, the forms get sidetracked and piled up, and it goes to a problem desk, and the agents then work through the pile. So it's really important to answer all their questions the first time. When you're submitting a 1023, you'll need to develop what's called your bylaws or your code of regulations. It's one and the same, but that defines how your organization is going to be governed. How many people are on your governing board? How many times a year are you going to be thinking of meeting? How do you appoint board members? How do you remove board members? How do you hire staff? Those kind of things. And we'll talk more about that as well as we go along. Now, in setting up your not-for-profit, you have a board of directors. The board of directors is legally responsible for your organization. You may be the executive director, they may have hired you to run the organization, but legally they are responsible. They set the policies for your organization, and all boards are policy boards. But if you're running a not-for-profit that doesn't have staff, then the board also becomes an operational board with the board members taking on the day-by-day responsibilities running the organization that would otherwise be performed by paid staff. It's important that you understand the differences here, because often organizations start out with a board that of necessity becomes heavily involved in the daily operation of the not-for-profit. But as the organization grows and more staff members are hired, you often find board members reluctant to let go of that day-by-day control, if you will. And it can cause some real problems because you've hired someone, you're paying someone to do a task, but that person finds that a board member still has their hands in trying to do the daily work. And that transition between an operational board and a policy board sometimes can be really tricky. There are ways to clarify this, and we will talk more about this much later, but in terms of actually writing down job descriptions for your board members and for your staff members so that everyone knows what their role and responsibility is. No one should be in the dark about that or be in confusion. Now, in your packets, you're going to find a legal form. It's on legal size paper. And no, it's not. Used to be. Okay. Looks like this. This is another one of these critical, it's not in the slides, it's separate.
It's in the slides too.
Oh, yeah, but you do have a separate sheet of paper. Okay, this is the governance structure of a for-profit organization, which we are calling the Little Tots Daycare Center. Jane Goodmom owns it. It's her money that got it started. She oversees it. She hires the staff. It's her thing. She makes all the decisions. She's the president, and her husband is nice enough to be the secretary and the treasurer. Jane operates it. She hires the employees. That's the structure of a for-profit organization. But let's look at the same daycare center, but run as a not-for-profit. Jane is the founder. She has a board of directors who is made up of a president, a vice president, a treasurer, a secretary, and a couple of other people. We'll talk more about board composition in more detail later. These people make the policies. They make the decisions. Not Jane, but this board. The board hires an executive director which we're going to assume for the purpose of this discussion is Jane. Could be another person, but we're going to assume it's Jane. And Jane then hires the employees. So you can see here that with previous structure, Jane made the decisions. In this case, Jane carries out the policies and the decisions of the board of directors. She does not have the same kind of control that she had if she was running it as a for-profit organization. And I know this may seem that we're coming around and keep coming around to this in a circle, but it's just critical you understand the differences and how difficult it is sometimes running a not-for-profit. Let's see. This is if this board was an operational board and actually running the daycare center as well. So it's a variation on the previous slide. Now your board, you need to have a board of directors or board of trustees, and there's no legally required number of board members. But you need to have enough board members to do the work of the organization. Please have an odd number of board members. Have 3 members, have 5, 7, 9, 15. Don't have 4 or 8 or anything with an even number. Why? Because boards can be deadlocked. And you want to try and avoid, if you have 4 people on your board and 2 vote for the resolution and 2 vote against it, you've got a deadlocked board. You can't move. Yes, that can happen if you have 5 board members, as an example, and one of them doesn't show up at the meeting. Yeah, it can still happen. But please, when you're putting your board together, make sure you have an odd number of people. Do not, under any circumstances, please do not put your relatives or your friends on the board. Don't put your wife, don't put your sister-in-law, don't put your cousin, your uncle. Don't do it. Don't put your close friends. I'm not talking about somebody you know who has expertise. I'm talking about the person you go out and have coffee with regularly and pour out your soul to. Don't put that person on your board. Why? You are running a business, ladies and gentlemen. Businesses and friendship, there has to be a dividing line. And you want your board members to make good decisions on behalf of your organization, not decisions that, well, you know, if we make this decision, the executive director won't really like it, and we've been friends for so many years. It just doesn't work. And the reason you don't want relatives is because families fall apart. And unfortunately, it happens. And how good a job a board member will a former sister-in-law do on your board? Not well, I wouldn't think. Make sure that you have term limits for your board members. Board members should serve for 2 years, 3 years. You can reappoint them for another 2 or 3 years, but then you should have them leave the board for a year. You could, of course, bring them back after that time if you want. And that's something, by the way, your nominating committee does. We'll talk about that later, too. But you don't want all your board members with terms that are going to expire at the same time. It would be terrible if you had a board of 5 people and they all rolled off on June 30th of 2015. You'd have to rebuild your board. So you want to make sure they have term limits, but you want to make sure they have staggered terms. So if you're running a 9-person board, 3 members go off in June of 2015, 3 more in June of 2016, and 3 more in June of 2017. That's staggered terms. So you're bringing new people on, and the new people can learn from the old people. They can learn about your organization. So make sure your board members have staggered terms. What do board members do besides governance? Well, you should have some expectations of them. They should first and foremost be committed to your mission. If they don't really care about what you're doing, they're not going to be particularly good board members for you. They need to be willing to give of their time, their talent, and their money. Not necessarily all three, although it's great if they can do that. But someone who's not willing to do any of those kind of things is not going to do any good as a board member as well. They need to be able to influence others, which means they need to have a wide circle of contacts in the community. They need to know people who know other people. It's helpful if they have not-for-profit board operations knowledge, because it really is different governing on a not-for-profit board than a for-profit board. They need to be willing to learn about your organization, and they need to be willing to raise money. Maybe not directly. Maybe they're not comfortable in say, going to you and asking you for money, but maybe they know you and they can suggest to the fundraiser on the staff, hey, this is someone who maybe can help us. So they need to be willing to do that. The board governs the organization. It establishes the policy, the goals, and objectives. The board, and only the board, hires or fires the executive. The board sets the salary of the executive. It sets the annual goals and objectives. Those are based on the business plan. It evaluates the performance of the executive against those goals and objectives that were set at the beginning of the year. And all decisions of your board are collective decisions. There's no such thing, and it's bad if it happens, but the president of your board should not be the one who is a dictator and forces the board to fall into line. Your board meetings need to be open. You need to have robust discussion before any decisions are taken. You need to have recorded votes. This is good governance, but that is basically what your board of directors does. Now, your board is going to make the rules, so please pick your board members carefully. Initially, when you're setting up your not-for-profit, you're going to end up picking the board. But later on, your board should have a nominating committee, and that nominating committee will pick the board replacements. Remember that your board is the ultimate boss, that they can hire or fire you, and you cannot get rid of your board. Only the board can get rid of board members, and only if it's set out in your bylaws how board members can be removed. It could be if a board member doesn't attend 3 meetings in a row, they're automatically out. It could be if they don't attend committee meetings, but you need to have some kind of objective way of, and you state this in your bylaws, of removing board members when it's necessary. Make sure you have a conflict of interest and a disclosure policy and process. In other words, if you have someone on your board, let's say you're operating out of multiple locations and you need to be renting office facilities. And so you think it'd be a good idea to have a realtor on the board. And that is a good idea. But you want that realtor to be advising you on property locations. You don't want to be using that realtor to actually do your real estate transactions. It's a conflict of interest. If your real estate agent, who's also on your board, is handling all that paperwork and earning a commission, it's a conflict of interest. So do avoid that. Try to find people who have experience with not-for-profit boards, who can contribute expertise. Here are the kinds of people that tend to make good board members, but there certainly are others. But accountants are one, because you're going to be dealing with money. But the accountant is not the same person as your auditor who audits your books, and we'll talk about annual audits a little bit later on. Lawyers are good board members, as are bankers, marketing people, public relations people, insurance people, business people, involved community people, potential clients of your organization, former clients. They can make very good board members. You will have, besides your board, let's say you have just for sake of argument, you have 9 people on your board, you'll need some board officers. Typically, your board will have 4 officer positions. Now, these are members of your board. Of these 9 people, 4 of them will be elected. One is president, one is vice president, one is treasurer, and one is secretary. That's typically how it works. Sometimes the treasurer-secretary position is combined. In some boards, there's a ladder function where the person who's secretary this year becomes treasurer next year, becomes vice president the following year, and ultimately president. That tends to provide continuity and provide a way of board members gaining experience before taking the top leadership role. Doesn't have to work that way, but it often works that way. Your larger boards will have committees. Some of them could include finance and audit, planning and evaluation, especially a nominating committee. You might have some operating committees. There are a few suggestions. But smaller boards don't necessarily need to have those committees. If you're dealing with a 3-person or 5-person board, it could very well be that that board can meet all of those obligations. Now, I hinted about this a little while ago, but again, I want to make sure that this is really understood, that you really need to define the roles of your board and your staff in writing. You do that in your bylaws. You make sure each officer's duties are defined in the bylaws, and you establish personnel policies for your staff, both paid staff and volunteers. It's really critical, and we'll talk more about personnel policies a bit later on. There's no hard and fast rule of how often your board needs to meet, although it must meet annually to hold what's called an annual meeting, and that's something that's set out in your bylaws. But it needs to meet as often as necessary to do the work of the organization. We'd suggest maybe 4 meetings a year, but maybe initially you're meeting every month. It just kind of depends on your organization and what you're doing. You want to set the date, the time, and the place of the meeting in advance, because you want to make sure that all of your board members can attend as to the highest extent possible. It doesn't help, except under emergency circumstances, if you're calling around the day before you want to hold a board meeting, trying to round up your board. So you want to establish your board meeting in advance. And you want to put out an agenda of the board meeting along with all the supporting materials sent out ahead of the meeting. You really do your board a disservice if they're coming into the room and they don't know what the agenda is before arriving, and they find a stack of papers about that high in front of each of them, and the topic that you say, well, we're here to approve the budget for the year, which none of the board members have seen until that very time. That's a disservice to your board. You're not going to keep your good board members if you're doing that, and you want to avoid it. So again, develop an agenda ahead of the meeting, send the supporting materials out ahead of the meeting. Now, some boards, besides having a governing board, have what's called an advisory board. An advisory board has no governing responsibility. It can make recommendations to the board for specific purposes and projects. This is a good place where you can park your retired board members, or people who have special interests or skills, or people of influence who maybe don't want to serve on your main board because they don't have time, but are interested enough to serve on your advisory board. So advisory boards are something, you don't have to have one, but for some organizations, it's a good thing to have. So we're ready now, Bob, to take us through the next step, which is how to manage your not-for-profit. Well, we only have 50 minutes. If you want a break, you know where the bathrooms are and the water fountain, but probably we should keep going, I would think.
Probably. Normally, this is a 3-hour presentation. So we apologize if we're skimming through this awfully quickly, but are there any questions on all this board stuff before we go to the management stuff? We'll take a couple questions, but then we are limited in time, so yeah, go ahead.
established nonprofit, but trying to get people involved.
Getting board members, you mean?
Yes.
Yeah.
Well, it's very difficult. One of the things we didn't talk about up front is Bill referred to it, getting to know other people who are doing the similar things you're doing. Get to know other not-for-profit organizations. Become a collector. Collect annual reports for a lot of reasons, one of which is you see who's on the board. Board members rotate. The majority of board members in this area will serve on multiple boards, either sequentially or sometimes at the same time. So talk to other not-for-profit people. Ask directly, is there anybody going off your board who would make a good board member? Some people going off the board won't make good board members, but some will. Ask. You'll find that people really share information. Everybody wants everybody to succeed, so that's my, ask your board members or ask your friends. You got a specific need, accounting, marketing, whatever. Ask people who might serve, especially if they have an interest in your cause.
The other interesting point that we've had to deal with is the competition. And you're talking about government contacts and grant money for the big nonprofit, preservation organizations that have a paid board. They know who to go for money and...
No, they don't have a paid board. You cannot pay your board members.
I mean, the CEO.
He's not a board member.
Okay, but still.
They have staff, they have paid staff, sure.
Yeah, it's just...
It's very hard.
The radar. They're under the radar foundation.
Right.
And that they go to social,
Right.
community scenes.
Yeah, that's the mark of a successful not-for-profit organization. They network, they know people, because there's such fierce competition for money.
And that's why any board members you get, they need to give you their time. You're not just talking about time to come to a meeting once a month, once every 3 months. You need their time. You need them to make those contacts. That's what you want them for. Yes?
Is it against the law to use your family when you first start out?
It's not against the law, it's
But
a
don't-
bad idea.
But please, do not do it. Don't do it.
It's a bad idea.
It's really,
Yeah,
I have a question
Sure.
about the bacon. Can a board member be making bacon, stuff like that?
making,
Be involved in, I think what she's saying is producing something to sell
sure,
as the means of getting
Yeah.
money to the...
yeah. And as long as it's within your mission, you don't have to pay any tax on it,
Okay.
as long as it's within your mission. Yes,
Okay, so you get your board formed, and you're the founder, so you're going to be the executive director,
maybe,
maybe, and trying to bring knowledgeable people in the area that you probably know about because you have the idea to start the nonprofit. So you're trying to create this and get it all going. How long then generally do you assume that role as executive director?
as long as you and the board agree that it's working. Yes,
I know a few individuals around that I know someone that runs they have a 501c3 status, but they are themselves and they keep their 501c3 separate from their business that pays their bills. How long can they go around operating, say doing peer support or recovery coaching under their 501c3 and not have a certain amount of assets before they would have to grow and eventually form a board?
Well, if they've got a 501c3, they told the IRS they had a board, and they listed names. So if they're not functioning that way, they're in trouble. Okay. Now, I want to make a clear distinction here. Bill talked about governance, board stuff. I'm going to talk about management. Now, there's a clear line there. There's a big wall there. The board sets policy, the management runs the organization. It's really critical for your board to understand that. There's an old adage in not-for-profits, board to board, staff to staff. Board talks to board members, staff talk to staff members, except you're obviously your director, your CEO, your manager. Okay? So we're going to talk now about the management side. So you've set up your board, you got the thing operating, they've hired you, let's say, as the CEO, the manager, the executive director. What's your job relative to what their job was? Their job was to set policy, set goals and objectives, et cetera, et cetera. First of all, you got to recognize that you answer to the board, not vice versa. You do not serve on the board except as an ex officio member. And therefore, you don't have a vote. There are exceptions, but normally you don't. You're there to implement the policy that the board establishes. You're there to staff board committees or to have somebody who works for you and you trust to staff them. You're there to implement the agency program services, and you're responsible for all management issues. Now, I will say, just as an aside, you're implementing board policy. It shouldn't be too difficult because the way the executive works with the board is hand in glove. You work like this. If you don't, your organization's going to fail, or you're going to fail, or you're going to lose board members. You've got to work together. So when those policies and procedures are developed, you're there. More than likely, you're going to do the work. So you're there, so it shouldn't be difficult to implement them. If you saw that they're coming up with some crazy idea as a goal that you know there's no way can be accomplished by this organization in the next year or two, and you don't tell them that, then it's your fault if it doesn't get done. You need to be involved in all of that. That's why you're staffing the committees. You conduct or supervise all daily operations of the organization. You develop the personnel manual, your board approves it. If you're really developing a true manual, you're going to need some help. Once it's done, you're going to want some legal review of it. Once you have it, do not deviate from it. You've got a policy in personnel that says do A, don't do B. Don't do A.2, do A. You'll get caught in terrible trouble if you do. Stick to your policies. You hire and fire all employees, not the board. Very different from school board meetings. If any of you have ever gone to school board meetings, they hire everybody, the board. You don't. You hire, your board doesn't. Board hires you, you hire everybody else answers to you. Some of your employees must meet licensing standards, or if you have nurses, counselors, social workers, psychiatrists, home health aides, all those have to meet certain standards. Make sure your people do that. Your people must be citizens or documented. You have to have some, and you have to verify that. Get your key people bonded. Cheap insurance, something happens financially, they're bonded. Whoever's handling your money ought to be bonded, okay? If you need professional liability insurance, get it. And most of all, make sure all the bills are paid. Make sure you pay your bills, particularly those nasty things called taxes, employment taxes, Social Security, those kinds of things. When you hire people, start out with a job description. Now, you should have in your bylaws a job description of your key board people and a very brief job description of all board members. Now you want a detailed job description of anyone you're going to hire. Even your volunteers, you want job description. And you want a schedule of salaries. For these positions, the salary range would be this to this, so forth. You want all of that. I should say, we're giving you a lot of things that you got to do. In the resources we're going to talk about at the end, there are examples of all these things. There are examples of bylaws, all of that stuff that you can refer to. So don't panic on that, but be sure you do it. You want to create an attractive work environment. The physical environment, the social environment, the professional environment. You want to be a top drawer employer. Go for the best you can get. The best you can hire, the best you can afford to pay for. Don't overlook disabled folks. Don't overlook old people like me. Sometimes people want part-time work. Sometimes people want full-time work. But don't set up barriers for yourself as to the limit on what you can and can't, who you can and can't hire. You want people to have the qualities, the capability, the training, et cetera, to do the job. And then you want to motivate your people. When you're hiring, you want to do background checks. Now, depending what you're doing, you're going to have to do extensive background. If you're working with older folks and have home health aides or something, you've got to do extensive background checks on those folks. Not just to protect your clients, your patients, but to protect your organization. If you're working with children, you've got to get background checks on everybody. Don't just assume that because somebody's a supervisor, they're not going to have contact with kids. Get it on everybody. Everybody, including yourself. And check previous employment. References. They're getting hard to do, harder and harder, because lawyers have told folks, don't tell anybody this, don't tell anybody. But you can get information, and that's what you want to do. You want to find out if this person knows how to work, is a good, hard worker, is going to be dedicated, committed, etc. Once you bring your people on, train them. Start with your job description. Job description will say, for this job, Sally's going to do this, 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 and this. When you evaluate her, when you train her, you want to train her to do this, 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 and this. Because even though she may have done it for 15 years some other place, you have a way you want it done. So be sure to make sure your people understand that. And don't just do it once, do it multiple times, do it ongoing. Communicate your business image, goals, and mission. Make sure people understand why the organization exists. Make sure it's a part of them. They eat and breathe it. That they're part of it, they know what it is, they can tell people what it is, and they're proud of it. You have somebody answering the phone, train that person to answer the phone the way you want that person to answer the phone. Don't just assume somebody can answer the phone, even though they may have been a receptionist for 30 years. And most of all, if you're charging your clients for anything, even if you're not, somebody's got to pay for this. The question comes, what's it cost? Everybody on staff should be able to answer that question and answer it knowledgeably, clearly, succinctly, in a way that's understandable. Everyone should be able to say that. And it can get very complicated. So your training needs to be ongoing. I guess I talked about passion and dreams. Make sure people are part of the business and believe they are, that they're indispensable, they're important. Give responsibility. When you give responsibility, you ask somebody to do a job, give them the authority to do it. Don't tie their hands. Don't tell them, well, you go this far and then come back. Either give them the job or don't give them the job. You give them the job, you give them the authority to do it, and then your job is to monitor how they do it. Not hang over them, but monitor it. How'd it go? Check it out. You want to compensate your people adequately. And I said before, not-for-profits often will pay less than for-profits for similar responsibilities. You buy into that, you buy into that. So that's the way it is. That doesn't mean you don't compensate people appropriately. And always get customer feedback. There are lots of ways to do this. In the last 15 years, 20 years, this has become the big deal. Little cards, anything. There's a satisfaction survey here. Everybody does it. Make sure you do it. Make sure you find out what in there is problematic, if anything, and follow up. Follow up. Just don't do it because somebody said to do it. How far do I go, Bill?
60.
I'm at 55, okay. Now, the board sets policies. When they do that, you want to keep track of that. And it's in your minutes, right, of those meetings. But apart from that, keep a folder with all policy statements, separate from minutes, everything. All of your policy, you should be able to have a policy manual that all of your staff know where it is, they know what's in it, people know what the policies are. And you want that written, you want a policy statement in your minutes that's signed by your board secretary, you want it dated, if it's revised, you want that noted, et cetera, et cetera. When you do a policy, it becomes the responsibility of the management to implement the policy. Now, just a quick aside on that. Sometimes you have goals or objectives that require board involvement. So when you establish a policy, maybe it's a fundraising policy, something that involves the board, you note that the board is responsible for A, B, or C. You know which staff are responsible for whichever piece of it. And you follow up on that, and you develop procedures for how you're going to implement that. It was my practice when I gave the board, when we arrived at a position we were going to discuss on a policy, that I shared with the board my thoughts on procedures for implementation. Now, that's not an item the board have to approve. Board approved the policy, I do the procedures. But I found it very helpful to get feedback from the board on procedures often, because they might see something that I don't relative to that policy. And I always found it very helpful to get that feedback. So I would present both policy and procedures for them. They would approve the policy. I would then take the procedures, revise them after discussion, whatever. And again, the title and position of the person responsible for implementing specifics, the date the policy was approved, etc. Sorry. When you're just starting out, we've found that there are folks who come to these sessions from time to time who are really invested in what they're doing, and they're invested literally using their money If you're doing that, you must keep your personal money separate from organizational money. Keep your personal money separate from organizational money. Don't mix them. Have separate checking, savings accounts, organizationally, not personally, all of that. Keep it separate. Your finance committee, every board, even the smallest of them, will have a treasurer, maybe not a full committee, but normally there's a committee, a finance committee whose responsibility it is to review the finances of the organization regularly. What's regularly? I think it's monthly, quarterly at least. If they don't do that, again, it's one of those big red flags. You can get in deep trouble if your finance committee is not reviewing finances regularly, at least quarterly. Now, your board may feel they don't need to do that. Just convince them otherwise. Because in the long run, they're going to be responsible anyway, and they need to understand that. So they should be reviewing it every month, quarterly at the least. When you're doing budgets, I said before, when you're doing policies, whatever, oftentimes you're going to write them. That's no more true than it is with budget. You know the budget. You know what you're spending. You know where things are going. You sit down with your treasurer and you say, here's what I'm thinking, and you develop a budget. And you get a good operating budget, you take it to the board and the full board approves it. Maybe they don't. And anything can happen with a board. Anything can happen. First board meeting I went to, they didn't accept the budget. Very first one. Everybody on the board did except the chairman, who said, I won't bring it for a vote. So, anything can happen. So you want to work things through and get the best you can, and then present it to the board for the okay. Keep written minutes of all finance meetings. If you're small and you don't have a committee, when you meet with your treasurer on these things, keep minutes. Consider it a committee. Keep minutes. If you have a planning committee and there's one board member and you, keep minutes. Personnel meeting, whatever, keep minutes. Separate folder. Board minutes, finance minutes, planning minutes, whatever. You must operate within that budget, and it's your job to make sure that you do. Now, budgets move. You anticipated spending X number of dollars, and now suddenly you're finding you got to spend more. Boards will often give the executive a leeway of a few $100s, maybe a couple $1,000, depending on the size of the organization, to move items from one line to another. Other than that, you got to go back to the board. It's just good business. You should get an annual audit. Now, I'm assuming when we say that, we're assuming you're a fairly sizable organization. If you're not real large, you should still have those books reviewed by an auditor, maybe not a full-fledged audit, except maybe every 4 or 5 years. Ideally, you should have an audit every year with a written report from the auditor. And when you get to be of any size, your accountant can tell you what that would be. You get to be of any size, it should be an annual audit. No ifs, ands, or buts. You go to the Akron Community Foundation and say, I want $3,000. They're going to say, we need 3 things. We want to know what you want it for. We want to see your not-for-profit status, and we want your last audit. And there's no wavering on that. So if you're not getting an audit, you need something to show them that someone outside of your organization, not your treasurer, somebody outside of the organization reviewed those books, and you have it in writing. When you're budgeting income, there are different kinds of income. We're going to go through them real quick. Fees and dues. Dues, if you're a membership organization, you'll have dues. Don't recommend it, but some people have membership. Otherwise, you might have fees. Maybe you're charging $5 for something, $50, whatever. That fees are an income. You need to project how much I'm going to get. Government income. There's a difference here in income of two things. One are grants, and one are contracts. Grants are where somebody gives you money. They say, I will give you X number of dollars. And they give you a grant. They just give you that money. Foundations do that. Government will do that on occasion. Individuals will give you grants or donations, private contributions. Investment income, whatever you get, invest and take your 0.5% income and enjoy it, whatever. But invest it. Don't keep it in a safe somewhere. Special events income. In-kind income. Anybody know what in-kind income is? Yes.
Somebody donates a heating system or time to do the work.
That's not really an in-kind. That's a donation that has a value, and you must acknowledge that value. The organization does some work. Let's say you get a grant from the government, and they give you $20,000. They'll say you need what's called match, or you have to provide in-kind 10% of it. Yeah, it's a percentage normally. Your supervisory time can be in-kind. In-kind things. They'll tell you what it is. That's all the income. It's just pretty much like anybody else, with an exception maybe of in-kind. It's pretty much. Expenses are like any business. Salaries, benefits, taxes, rent, maintenance, insurance costs, public relations, legal costs. Fundraising has a cost. You're developing a brochure, that costs you money. You're having a dinner, that dinner costs money, and it takes time to arrange that. That's all a cost. So factor that in. These are when you do a budget or you're looking at your expenses, that's them. Insurance. Insurance is just like any other business. General liability insurance. Directors and officers, this is one that for-profits won't have, well, maybe they do. They probably do. The large ones certainly would. D&O insurance is to protect your board members in case they do something illegal or they're accused of doing something illegal in the normal course of their business with the organization. And your board members will want to know if you have it. It's not expensive at all. Make sure you get it. Professional liability, if you have people who need that. Building insurance, a lot of this gets covered under your liability on occasion. Healthcare insurance for your employees, depending on how you're doing that. Business interruption insurance, relatively new on the block. That doesn't cost much either, but it can be very helpful if there's a flood, a flash flood, and you're not able to operate for a week. You're losing not only equipment. If you're running a housing thing, you might be losing bedding, all kinds of things. You're also losing possible income. Business interruption insurance might cover some of that. Workers' comp and unemployment, you have to provide, just like anybody else. And I think Bill picks it up here, right?
Okay, we're in the home stretch. We'll talk about financial support, and that's why you all came, because you want to know how to raise money. Well, we'll try and help. You can charge fees. You can charge your participants fees. That's perfectly permissible as a not-for-profit. You can do that. And you can, when you're doing your budget, you want to make an estimate of those fees. You can receive donations. And the way you do that, the only way you can do that is if you are designated as a 501c3 charity by the Internal Revenue Service. You must be registered with the Ohio Attorney General, and you may be required to be registered with the city or the county in which you're doing business. It just depends location to location. Any donation that you receive, that your not-for-profit receives, must be acknowledged in writing. That's very important, and I have a little bit more to say about that as we go along. Donations can be of two types. They can be either designated or restricted, or they can be undesignated or unrestricted. What are the differences? You come to me and you say, Bill, I'm raising money to improve the park in my town, and we'd like to put the swing set in, and it'll cost $1,000. Could you help with that? So I write you a check for $1,000. That money can only be used for that swing set because you asked me specifically for that. If you come to me and say, Bill, we're improving the parks in this town, could you help? We have a number of things that we'd like to do in the park. And I say, gosh, that sounds really great. And I write you that same $1,000 check. It can be used for anything in the park. So are we clear on that? Because that is really critical. If you make a request of a donor for a specific project, you must use the money for that project. You can only use the money for that project. You can't use it for something else. Therefore, it's really helpful in organizations to get as many unrestricted or undesignated donations as you possibly can get. General operating donations are some of the hardest ones to come by. Foundations especially don't like them. They think you should just be able to operate, but that doesn't take care of keeping the lights on or the heat or the power. But general operating donations are really important. So those are some of the things with donations to be careful about. Any donation greater than $250 must be acknowledged in writing, stating that nothing was given or received in exchange for the donation. Okay, what do I mean by this? You hold a benefit dinner, and the price to get in, let's be really high on this one, the price to get in is $300. And you think, wow, I'll make a $300 donation to that organization and I can deduct all of it off my tax. No. The organization must tell you of that $300 how much the dinner cost. Maybe the dinner cost $75, which means you can only deduct $225 off your tax. So you've got to state that nothing was given or received in exchange for the donation, or that something was and how much that exchange was. But all donations have to be acknowledged in writing. Your donor information becomes part of the public record. So your donors, they can request not to be listed in like a program bulletin or something, or an annual report, but you still have to keep the information, and anyone can come and look at it. Foundation grants are another source of money. Now, Bob and I want to tell you that there's not a single not-for-profit that can be run solely on foundation grants. Not one. Foundation grants usually are one-time contributions, and they may or may not be renewable, but don't expect a renewal. If it happens, great. Foundation donations always require a written proposal, and it's based on a form developed by that particular foundation. Usually, those foundations require written reports, sometimes monthly, sometimes semi-annually, They want to know what the outcome was. If you requested money to, again, let's use that park as an example, they want to know that the park was equipped and opened and how many people came and used it. They want to know how their money was used. And they may or may not require that their donation or their grant be acknowledged. Some foundations want the publicity, some don't. Now, when you're writing proposals, a 20% success rate is considered very good. And that's after doing a lot of spade work before even writing the proposal. So your preliminaries are a must. So again, you're going back 2 hours ago when we talked about doing the business plan, things like that mission, your program description, your budgets, all that comes in when you're writing grant proposals. But before you start writing a proposal, research the foundation which might fund your mission, and find out if they seem like they would be a really good match for you, a good fit for you. If it seems that it would work, then make a preliminary contact. Ladies and gentlemen, not by email, not social media. Pick up the telephone, make an appointment, go in and talk to their program or project officer. They are delighted to talk to you. That's why they're there, because they want to help you and guide you. They don't want to receive a lot of grant applications that just don't meet the mark. So they'll tell you, and they'll be willing to work with you to help you, not to write a proposal or shape a proposal, but at least say, well, don't ask for more than this amount of money, or your chances would be improved if you came in and requested these kind of things. So get to know that person, because when it comes right down to it, all fundraising is based on person to person. It's a personal rapport that's developed. And if that program or project officer knows you and they know about your organization, you spend enough time trying to educate them, it'll really help you. Because ultimately, when the foundation distribution committee meets and decides how much money they're going to distribute in a grant cycle and who's going to get the money, you aren't in the room. You aren't there. The only thing that distribution committee has to guide it is your written proposal and the foundation project or program officer. And if a trustee of the distribution committee has a question, and the project officer will speak on your behalf and answer that question, that enhances your chances of getting some money. So that's why that personal contact is really important. You can ascertain what a foundation, what their typical grants cycle runs. You can get that usually by looking at their annual reports or at their websites. Also at the Foundation Center, which we're going to talk about the Foundation Center in a little bit in some more detail. But you can figure out typically what a foundation gives in the way of grants. So request only what they might grant. If you're dealing with a foundation that gives grants in the $3,000 to $10,000 range, don't go in and ask them for $50,000. They won't give it to you, and it tarnishes your credibility. Assume that whatever you ask for, you're going to get a little bit less, sometimes a lot less. But it's good that you get something, because that opens the door for future opportunities. Make sure you follow the foundation guidelines. So again, usually the big foundations have it on their websites. That's again your personal rapport you'll develop with the program or project officer. Make sure you know what they want. If they say they only want a 5-page application, don't give them 20, give them 5. If they say they want a 3-year budget and they want your IRS letter and they want your audit, you've got to do it because they say they want it. If you don't give it to them, it'll come off the pile immediately and won't be further considered. Whatever happens, whether you get a grant from a foundation or they decline you, make sure you thank them if you got the grant. Make sure you provide the written reports as required. If you didn't get the grant, call them up. Ask them in a nice way why. They'll tell you. And it could be that you asked for too much money, or it turned out they didn't have as much money as they thought they were going to have. There are all sorts of reasons, and you want to know why, and they'll tell you. And please remember that foundations do share information. In Summit County, there's the Summit County Council on Foundations, the big foundations. They do meet regularly, and they do talk about projects. And that's why when you pick up the Beacon Journal and you see that 3 or 4 foundations are coming together and they funded this brand new project somewhere in town, that's because the foundations have talked to each other and they've said, hey, there's a real pressing need here. Let's see what we can do to help. Local foundations vary in size from the very small to quite large. Small foundations, especially family foundations, might just distribute a few hundred to a few $1,000s a year, period. And usually those foundations simply require a simple letter. They can be to a trust officer in a bank. Again, I'll tell you in a few minutes of how to search this information out. But the larger foundations, such as GAR and Akron Community Foundation, Sisler McFawn, some of the others, can give $25,000, $30,000 up, and sometimes well in excess. GAR, typically there'll be a few in there at $100,000 or more. The Akron Community Foundation 2 days ago had in the Beacon Journal had the list of their most recent grant awarding, so you can see what they awarded. National foundations are not going to be a likely source of funds for any of you because they work generally on large national projects. But there is a possible exception, and that's the Knight Foundation. The Knight Foundation started in Akron. It was initially part of the Beacon Journal because of Jack Knight, who was the long-term editor. When the papers were sold, when the Knight Ritter organization was founded, and the Knight brothers took a lot of money out, they've used that money to form the Knight Foundation. And that is active in all the communities where there formerly were Knight newspapers, Akron being one. The Knight Foundation might be a possible source of funding for you. They're based in Miami, but there is a person in Akron who represents the foundation. Did I go too far here? Yeah, no. Sometimes with foundation support, they provide what's called a challenge grant. You ask them for, let's say you ask them for $100,000, and they say, no, we'll grant you $50,000 if you can raise $50,000. And having done this is a really good incentive for a lot of organizations. It usually requires you to raise an equal amount to what you're going to get in the grant. It verifies that you've got community support. Not all foundations do this, but some do, and for some projects it's really useful. Now, Bob talked a few minutes ago about contracts, and this is an agreement by a funder. It can either be some kind of a private organization, or it can be a governmental entity to provide for specific services or products at a specific rate according to specific requirements. These are competitive, they can be time limited, they always require a request for proposal. Sometimes you need to attend a regional organizational meeting prior to submission of your proposal. There's generally a time lag between the delivery of service and payment. So if you're running some kind of a social service organization, as an example, and you're running it on a government contract, and they agree to pay you so much per client served, you bill them at the end of the month. So on the 31st of this month, you send them off a bill. And it says, we serve this many clients, this is the contract number, you now owe us X number of dollars. It could take that government entity 30 days, 60 days, maybe 90 days to process the paperwork and turn it around and pay you. And that's why, again, when we talked, again, going back 2 hours ago, why you need to generate a profit, you need something because you've spent the money to serve the clients in October. You may not get paid until January. So that time lag can be really critical. They generally will have a list of specific requirements. These are open to public review, and oftentimes the materials belong to the funding entity when the project is all done. Sometimes projects require a match of money, sometimes in cash, sometimes in kind. Bob talked to you about that a while ago. Government contracts can be with the local, with the city or the county, the state through specific state departments, and the federal government through various departments of that entity. Fiscal years can vary depending on whether it's the city or the state or the federal. There's some unit rates that may or may not be negotiable, and that's something you want to set up with when you're executing contracts for services. Okay, we've covered an awful lot here. Normally we have 3 hours, but we have to do this in 2. In summing up, I want to urge you to attend a SCORE workshop on writing a business plan. On our website, akronscore.org, you'll find a list of all of our upcoming workshops. Write a business plan. We have workshops on writing business plans. You can do that. And then if you want to schedule a personal one-on-one counseling session with either Bob or myself, call the Akron SCORE number. You're going to talk to Pauline, the lady in the back of the room, and she will set you up with a meeting with either Bob or myself. I'm typically at SCORE on the first and third Wednesdays of the month. Bob's schedule is a little bit more flexible than mine, but you do need to make an appointment in advance, but we'd be really happy to talk with you. We want to acknowledge 2 resource materials. One is a nonprofit kit for dummies. The other is how to form a not-for-profit corporation. These are the resource guides that we've used in putting this workshop together. These books are available in this library and in libraries all over Northeast Ohio. I would urge you not to buy them initially. I'd urge you to check them out from the library, read them. If you want to later buy them, great. Both of these books come with CD-ROMs, which has just about every form that you're ever going to need. And you can download those into your computer. So when we talked a while ago about writing bylaws, there are sample bylaws. You copy those into your computer. You massage them to make them work for your specific not-for-profit. Print them off. You're good to go. And it's perfectly legal to use them in this way. You're not ripping anybody off. It's there. So there's the phone number in which to call us and to schedule an appointment. Now, I know we're running out of time, but I just want to review a couple of other things with you really quickly. In your packets, there's a not-for-profit resource guide which lists the books we've talked about. It lists some websites of sources of business plans for you to at least get an idea about. The next one is called the Foundation Center. This one is really critical for all of you. The Foundation Center is a database of United States grant makers and their grants. And they publish these in large, thick books. But they also have an online component where you can go online and put in parameters and do a search for funding. The Hudson Library has access to this. You cannot access it on your own personal computer at home without paying, frankly, a small fortune. But you can access it through the Hudson Library up on the 2nd floor in the Burton Morgan Center. It's also available at the Akron Public Library at the downtown location and at the Twinsburg Public Library. But the Foundation Center is an incredible resource for you. They also run some workshops, some free, some that they charge for. They also are a repository of the 990 forms. Those are the tax returns. So you can look up virtually any not-for-profit in the country. You can see how much revenue they took in, what their expenses were, what they paid their most highly compensated people, and their most most highly compensated service providers. Important resource for all of you. Another one is called GuideStar, and that's also a repository of the 990 forms, and also has some very good informational pieces on fundraising and on board development. Federal grants.gov will give you information about federal grants. You can research federal grants using that site. If you want some legal advice for $300, you can buy an hour. You get an hour free, and then you get 10 additional hours with Gary Spring at the University of Akron Law Legal Clinic. Very good resource. So there are other sources of information on this sheet. Another one is the Digital Media Center at the forming a not-for-profit corporation in Ohio. Lots of information. It looks like this. It's in your packet, and you'll get some good information there from it. Okay, we've got like 3 minutes till 8:30. Any questions? Yes, in the back.
Not-for-profit will ask certain people to be on the board.
Yes.
Lawyers and accountants.
Yes.
Certain people. What happens if the not-for-profit needs their expertise? Is it improper for the board member who's a lawyer, accountant, service professional, etc., to charge for their services?
Yes.
Do they have to farm it out to some other?
That attorney on your board ought to be able to give you general advice, but so you don't have a conflict of interest. You should not be paying the attorney who's on your board to be doing your general legal business. It's bad governance. Plus, I mean, it's a total conflict of interest. Other questions? Yes.
You mentioned, I've got a couple. The tax exempt bonds.
Yes.
As a source. What?
Those are only going to be available if you get those through government, city, county. Unlikely that a startup not-for-profit's going to get those. Now, Historical Society might. You might want to talk to somebody about that.
What you'll do, that's where you're going to want to make a really good contact with, since that generally those come through the county, you want to find out who represents, who your county council representative is,
right.
and go in and talk to the person. They'll get doors open for you. Yes, you had a question.
How broadly can you define community?
As broadly as you'd like.
Yeah.
Broadly as you like. You're talking more about defining your mission or your purpose?
Yeah, it would extend out to missionaries, which can be all over the world.
Could,
yeah.
Depending on your organization, sure. The question is back there.
Just real quick on the restricted money for restricted donations.
Yes.
If you don't use all that money for that project, say the project costs less than you originally thought, do you just ask that the person say, hey, we didn't spend all the money for the project because it costs less, can we put it towards something else?
That's what I would do.
Okay,
yeah.
You can do it that way?
Yeah.
And also one other question, real quick. I said, if I'm on a board and I get something I learned here and I take it back to the board, and for example, like say all donations must be acknowledged in writing, and I tell it to the other board members, some response I might get is, well, says who? What kind of backing or legal backing can I say, well, we're required to do this?
The Internal Revenue Service.
So that's basically where we're getting all the laws.
Yep.
Okay.
Yeah, we're not making, there's some personal opinion from Bob and Bill in this, but that one, that's not a personal opinion, that's the law.
Okay, so it's like contact, we'll get information from the IRS on what.
The IRS, and I don't remember the publication number, but they publish a really good guide to not-for-profit organizations, and that kind of information is listed there. If you go onto the IRS website, there's a banner on it, and it says, I think, charitable organizations or something. Click on that, you'll find it.
Okay.
Find more than you want.
Yeah.
We have some of these from the state as well.
There was the fundraising permits. That's the first time I've heard of that.
The big one you want is the one
With the
from the
attorney
state of Ohio, which is an annual one.
Yeah, I mean, you have to have it.
It's only $25, I think.
But for any kind of fundraising?
Yes.
Yeah.
Small to large?
Yeah.
Absolutely. But depending on what community you're working in, what county and then what community, you may need a fundraising permit. And depending on what kind of fundraising you're doing, you may need a fundraising permit in that particular locality.
Normally, that's not a big issue, though.
No.
The state issue, you need to do that.
And what about working with a for-profit, nonprofit partner, like you?
They can't hear you in the back.
Working for getting a profit and nonprofit together to get to the joint effort to raise money for the organization. That would include money making. That would be above the UBT, UBIT.
If a for-profit organization wants to work for you, and wants to work and get money for you, and then donate it to you, they can do that. No problem. They can do whatever they want with that money. So if they have a project, they want to raise money for you, and then you cut a check for you, it's a donation. That doesn't mean you can't talk to them, doesn't mean you can't help them even with information to do with flyers and all that. But if it's their operation, they just make a donation.
All right, it's 8:30 and they're going to throw us out shortly, so we do need to conclude. But before we go, Bob and I, first of all, want to thank you all for coming. We want to remind you to fill out the evaluation forms. There's a form from the library that is helpful for the Hudson Library people, so please fill that out. Then Pauline, we have a green one for us. Okay. Fill that out and give that to us as well as you leave. And then if you haven't, please make sure you fill out this SBA form. And then again, if you want follow-up appointments, call Pauline.
And thank you. You've
Yes.
been very patient. Thank you.
Okay. Thanks a lot for coming.